resumes its down move. And in that case, that gives you a natural point to think about trailing a stop. So again, if you can get the combinations of the chart pattern indicating a down move has started, and then use a Fibonacci pattern that corresponds or basically supports the premise for this down move, then that gives you more confidence that the particular pattern taking place is the right one, or the one that's going to work. Now, as I said before, the non-trending patterns are the triangles, the ascending triangles, descending triangles, rectangles, and pennants. Okay. Now, let's look at some live action here, see what's going on. We hear the market beeping quite a bit. What I usually do is I rotate back and forth in my chart patterns once I know what I'm looking for. So in this particular case, I have the screen open, and I bounce back and forth between support and resistance, looking for between chart patterns and Fibonacci patterns, and waiting for something significant to show up, an alert to go off to give me an idea that something important is taking place. So we may not, because of the way the market's trading right now, we may not see anything in particular that's taking place, but you can see that we have this UK 100 index CFD seems to be forming this base. We see that it's a falling wedge pattern, meaning it's a trending pattern. Okay, that's one characteristic that we just covered. The lines are not, they have this down slope, but they don't appear to be crossing sometime in the future. So that makes it a non-trending or a trending pattern as opposed to a triangle, say, for example. So you can see that all this action is taking place inside this wedge, and we're starting to see a breakout here. Okay, so the way my analysis usually works is I look at this and I say, okay, AutoChartist has identified potential breakout to the upside. Due to the market conditions, it's not really moving to the upside very strong right now, but we do have this target zone identified at 53.78, the minimum downside target, to 54.85. Okay. Now what I want to do is I go to my Fibonacci patterns, and I have prearranged these to look at for this UK chart, and I'm looking to see if anything comes up that could support my notion that this chart pattern for the UK is going to move into this target zone. And at this point, nothing significant is taking place in the Fibonacci section for the UK. So I may want to move on to another market, and I may want to look at additional chart patterns to see if something else is taking place. In this case, we have a head and shoulders pattern, or an inverse head and shoulders pattern for the JP 225. It's a Japanese stock index. Okay. Now we see this market again taking place, and we see a potential breakout to the upside. We see a breakout to the upside and hit a target zone based on this formation. Okay. Now what we're looking at is we're saying perhaps something in the Fibonacci section of the AutoChartist is telling us that this market has further upside, or in this case, again, nothing is saying that this particular market is that the pattern that we're looking at is going to change. So in this case, the chart pattern, the inverse head and shoulders chart pattern, is showing us that this is a strong pattern, and that there's nothing in terms of Fibonacci patterns that could mean that we're trading it in the wrong direction. Okay, so in this case, we're going to follow the rules that we've developed for chart patterns and look for it to hit our target level and maybe extend beyond that. So there's nothing to help out. Now, if we look at another pattern on this US 2000, this is a completed pattern. This also showed a breakout to the upside. So I'll move into the Fibonacci patterns and look at the US 2000 to see if something's come up that'll tell me that I can expect more to the upside, or less. And again, as I said before, when you're going live with these trading conditions, nothing is cooperating this morning. In other words, I'm not finding an exact example of the support in of the Fibonacci and the chart patterns combined. All right, when we look at additional chart patterns, we see that we can go to the U.S. Tech and see another rising wedge pattern. Okay, looks like all the patterns that have taken place are these basically these rising wedges and these breakouts to the upside, and that the Fibonacci patterns have not had a chance to adjust to current market conditions at this time. So what we're looking at are some really wicked counter-trend moves. You can see that we were in, downtrend, of course, yesterday with the big sell-off, and now we're getting some movement to the upside. So we can continue to go down with all these patterns that are taking place, and they all look relatively the same. That everything, the market today is following these Fibonacci patterns, or it's following these chart patterns, the conventional chart patterns, and looking for and following these breakouts to the upside. They haven't been the cleanest. You can see that some of them have gone sideways before they've taken off, but I haven't seen a pattern on these stock indices that matches up cleanly. What we could look at is an example from in this U.S. Tech. Let's look back on this UK. I think we have an example of a chart pattern from from several days ago, where we had a breakdown. Let me scan through this here. A lot of patterns have come up since last time I looked at this. All right, here's what an example, and it's already taken place, but you can see that up inside here, this market formed a triangle pattern and then began a prolonged move down. Okay, this is from the August 3rd area. Okay, now what you could do is look at your Fibonacci patterns from a while back for the UK, and you can see if anything has taken place that would give you an indication that this market is poised for a move down. Okay, so that's one thing that you want to do, is you want to be able to look back and look at longer term patterns and see if there's something in the past that gives you confidence that this market's going to work its way lower. Another pattern you want to look at is your I set up stock indices here, for example, non-trending patterns. So I'm looking at all the significant non-trending patterns that are taking place in the market. You can see there's really nothing for today that's taking place for non-trending. So I switch back to the trending. You can see that there's this trending patterns taking place. So what I'm doing here is I'm filtering between trending and non-trending to set up my universe, and at the same time, if I do see something taking place, I'm moving back into the Fibonacci section, and I'm looking to see if something is taking place in terms of these stock indices, to see if I am getting a breakout or some kind of retracement. So that's pretty much how I rotate it, and I think the reason why we're not getting the massives is because of yesterday's trading action was so volatile that it took out several of the samples that I was working with and looking at throughout the week. That the move yesterday was so significant that the market is basically trying to start over again and reestablish some of these patterns that were destroyed by yesterday's volatile market action. So basically, though, even though I can't show you a solid live example today, I just want you to keep in mind that there is a rotation that takes place between the chart patterns and the Fibonacci patterns. there's a rotation in the marketplace between volatile and non-volatile time periods, between expansion and contraction, between the auto chart as trending and non-trending patterns. These things take place, and it's up to you as a trader to make a switch between following non-trending and going to trending patterns. But you may have a plan, but you may have to make a change to the plan. Basically, what you want to do with chart patterns and Fibonacci patterns is you want to identify either the primary pattern as a chart pattern, meaning a triangle breakout, or a channel breakout, or maybe a market trading inside of a channel. And then what you want to do is you want to look at the Fibonacci patterns to see if that particular financial instrument is also coming up there. And if both patterns are pointing in the same direction, then that's going to give you greater confidence that the market's either going to go up or down strong, depending on which pattern you're following. At the same time, if you follow a chart pattern, say in a swing chart, and you're looking for a market to make a bottom inside of a channel, you can switch back to Fibonacci patterns, and you can look at to see if it identifies retracement levels that can help you make a valuable trade, or give you valuable information to make a profitable trade. So that's really what we're trying to accomplish today, that you can use the two combined. You can use chart patterns and Fibonacci patterns combined, and given the right market conditions, when these two patterns take place, they can yield important information that can make you either set a reasonable profit target or help you set stops and trailing stops. And we'll be able to handle questions now at this point. That wraps up basically the webinar, the auto chart is part of it. If you have any questions, let me take a look here and see what we can do. Questions.
Hi, James.
Hi, Yvette.
Hi. Thank you very much for that very good session. There's one.
I was I was up pretty early this morning looking for all week long. Things look. You can always go back in the past and match things up, but sometimes when you do it live and you have certain conditions,
yes,
like today, and then today is the U.S. unemployment number. So you're not looking at normal trading conditions.
Yes.
So there's a lot of the samples I had this morning were just blown up.
Yeah.
And
okay, we're still live. We've still got our audience live. So I don't know if you want to maybe just have a look at one or two questions. And then just to remind you guys that we have these weekly webinars every Friday. So we're looking forward to seeing everybody back next week. And I'll chat to you soon. Thanks very much, James.
Okay, thank you.
Right.